What a turmoil over the last couple of days before the election, but there are some huge opportunities of stocks that you can buy, and therefore welcome to another episode of Stocks to Buy or Buy. Guys, if you're liking this kind of shows, please subscribe my channel, because there's always new episodes and new shows that coming up on this channel. It's a lot of research work, it's a lot of work, so make sure to smash that subscribe button. And if you like it, smash the thumb up as well for the algorithm. And for me, thank you very much. And these are the stocks that we are turning into today, okay? So we are talking about Tesla, we will talk about Twitter, we will talk about SAP, we will talk about CBL, and finally we will talk about Amazon. Stay tuned and enjoy. So for Tesla, it's just the simple fact that it's such a brilliant company. I mean, with the manufacturing skills, with the sales, with the quarter deliveries, with the innovation, with this management, with Elon Musk, you have so many great attributes to just buy the stock. And tell me, when was the last time that you see Tesla for around $400 or below $400? It was back in September, right? In the September months, we had the stock, in the beginning of the September, we had the stock below 400, and it didn't stay for long that way, right? We went up until I think 461 as of 13th of October, and then had, you know, the downturn, and it looks like it's bouncing back already as of this recording. But I want to emphasize that this stock is something that I really like for the long-term perspective here, okay? You can buy Tesla when you are interested into a growth company that is still so young. Yes, it has, by the traditional measures, obviously a very high valuation, right? But think about a little bit in the future. Amazon was for a long time also very much of overbought or over, let's say, valued thought stock until it reached new highs. It showed that it can innovate, then came Amazon Web Services, and all of these things showed us that, you know, you can be high in value and still just keep on growing. And this is the beauty about Tesla, and that's why Tesla is now, right now, after the crash, a fantastic purchase. Yo, did you heard about Twitter just recently? Well, you can buy Twitter now with a 20% less on the price for a stock. Now have a look. The earnings were pretty okay. I mean, you know, still a revenue growth of 14%, the net income a little bit less, the EPS obviously therefore less a little bit, the net profit margin a little bit less, operating income also a little bit increasing, as well as cash on hand. However, the beat were pretty much more than was expected. And now here comes the thing, guys, okay? If you're looking into the stock of Twitter, you can see there's definitely a lot of appetite for the stock, okay? Just in the last couple of 3 months alone, we could gain 44% on the stock. Now, on the other side, it's definitely a stock that will be, in a company that will be around for a couple of years. With a market cap of $32 billion, I think that Twitter is this unbelievable great opportunity here now to buy the stock 20% less to September or even August prices, while you're still enjoying the whole benefit that Twitter is giving you, which is the overall situation that it's one of the best social media and has this unique mode that no other social media out there is really giving you, right? I mean, everybody knows Twitter, everybody will use Twitter. It became this very social thing where you check news, but also what your favorite celebrities are doing, what people think about the world and everything. So it's all combined a fantastic social media platform that will be around, and with the overall growing stock market in the next couple of years, I think Twitter will just keep on growing, and I can see that Twitter can be 40, 50, 60, $100 billion company with the further growth. I think there's the fantastic CEO Jack Dorsey, who is a fantastic visionary as well, and he will be always on the top of things to think how to steer the company in the next direction. If it's all right with all this noise that's happening with the censorship, company should do this, I don't know, but this is just temporary noise, and I think if they make things right, they can be a very, very interesting comeback stock. And therefore, I think Twitter is a buy. SAP, the huge enterprise software giant, B2B, super amazing company, super well run, even though I really like the last CEO that unfortunately went for another venture, but still I think that SAP has something very, very unique here, a lot of moat, as you would say, in the growth industry. And I think that this is a company that you can buy if you see value in enterprises going digital. I think this is just the start of companies going more and more digital, working with more and more data, as we having over time collected so much data that you need this expertise of a SAP, at least for big enterprises, to run your own, data flow and data structuring of your data Amazon. Okay, so think about this company as a very, very well-run German software giant that is now for a huge discount. Okay, so as of this recording, you can see that the stock first, had a little downturn since about the 1st of September, because the 1st of September or the September months in general didn't have this great performance, but then came the huge crash. Okay, 36%. 36% you can now save by buying SAP stock. And believe me guys, this is a 130 billion euros market cap company, and I think that they are doing so well and they are so, let's say, cheap as a software company with a PE of 25, that I think that there's huge potential for this company over the next couple of years. Yes, we might have going to a turmoil, but then you can buy the stock on a very, very cheap basis, which I think, is something rare these days. And that's why I think that SAP, as of this moment, is a nice purchase of a nice stock for the long term. You're having a very, very quality product, you have a very, very quality company, and this for 36% less than the recent highs, guys. This is almost a no-brainer. Next stock is CBL, and this is a company that I will take as an example for a whole industry. I'm thinking that there is consumer behavior change, that this company that is doing commercial leasing, retail, will have a very hard time in the next couple of years, because there will be just less and less retail. People will order in the internet. They tried it out during the lockdowns. They thought it's fantastic. They think that, going to a retail is something that is not 2020 anymore that far, right? I mean, yes, for sometimes you just want to try something on and want to have this nice little shirt and go and have the shopping experience, but the classical retail will die out over time, and therefore I'm thinking also the infrastructure behind, so the commercial leasing, the commercial properties, will have also a very hard time, and therefore I'm thinking that this industry and this stocks are very in danger, and therefore I think you should definitely think about selling those. So goodbye. Welcome Amazonian. Now I know we talked a couple of times about Amazon as well, but I think that the recent earnings gives a new impact on a great opportunity here, okay? We are talking about the most effective, most, let's say, product-focused, consumer-centric company in the whole world, and having such a such a great powerhouse of innovation in terms of e-commerce, in terms of, you know, how to manage a company, in terms of Amazon Web Services. I mean, just let's go quickly through the numbers, okay? So we are having a stock as of this recording that is worth $3,000. I know it's a lot of money for many people, but think about it. Do you care about the price? No, you don't. You care about the gain that you can make on this money that you invest into company. And there's other ways to purchase this kind of company or stock when you're thinking about partially stock investing, right? Or partially share purchase. There's a lot of platforms that are offering this. So I want to just go through the mouth-watering Q3 earnings, okay? And listen to that. Revenue, almost $100 billion, which was an increase of 37% year over year. Net income, 200% increase. Diluted EPS, 200% increase. Net profit margin, 115% increase. And this is year over year, guys, okay? And this is not the small startup. This is one of the biggest companies in the whole world. And to having this, man, this is just the beginning of a new chapter for Amazon, okay? But let me continue. Operating income, $6 billion, which is a 105% increase year over year. And then we had cash on hand, 28%, and cost of revenue, 38% increase. And what changed to the negative was just the overall cash position, which, you know, was due to the spending that they just spent to go higher and higher in terms of marketing expenditure and logistics expenditure, and just to keep the growth going on, okay? So let me show you. In marketing expenditure, I mean, obviously, you know, some articles that they sell maybe on losses, which I count as marketing expenses in personal opinion. But look at this chart. I mean, this chart, and you can see exactly where we went into a totally new dynamic, okay? So here you can see we had a stock of $1,600, you know, slowly went up to almost 2,000 and so on. But then the absolutely crazy run, because Amazon was one of the big winners in the e-commerce and digitalization game. And even as such a great company with a market cap of $1.5 trillion, we still get a gain of 70% from March lows. This is a very interesting stock, very interesting company. And as you can see, the PE ratio is still very high, right? But this is just because the company just keeps on investing into the future, into logistics, into infrastructure. So Amazon, an absolutely huge buy.